All right, the markets have actually slipped into the red right now. Just 2 minutes back, Nifty has actually nosedived back into the red, but Bank Nifty, that is up good 23, 24 points in the green, perhaps giving some amount of support to the overall market. Nifty futures is also in the premium right now, about a 15-point gaining right now as far as the Bank Nifty is concerned. They've given up some of the gains, but still managing in the green. Deepak, have you looked at the charts of some of the mid-cap IT companies which are actually bucking the trend? Mindtree for one, even Geometric for example. Which ones do you like in this space?
Most of them. That whole sector is probably the strongest in the market since about a couple of weeks or even longer. In fact, one of today's buys recommendations, I have got a mid-cap tech stock. So there is a fair amount of momentum in those, not so much in the large caps, though even those are not doing badly right now.
And what's your next recommendation apart from KPIT Cummins?
Well, KPIT Cummins was a buy recommendation with a stop loss of 131.5 and a target of 139. The other two are, one is a buy, that's Balrampur Chini with a stop loss of 67 and a target of 71. And there's an intraday short sale in Educom Solutions, which has actually risen a little bit since then. So I would, though it's got a stop loss of 157, which is not hit, and a target of 151, it would be safer to sell it if it goes below 155. That's just about half a rupee from here.
All right, Deepak, many thanks for that. Let's touch base with the management of Pratibha Industries. We have Yogen Lal, CEO of Pratibha Industries, joining us on the phone right now. Mr. Lal, thanks very much for speaking with us. Your bottom line and top line performance have been fairly robust this quarter. Even in the consolidated earnings, I see EBITDA margins expanding to 14.5% versus 13.5%. My key question to you is the increase in interest cost, which has gone up significantly. Are you looking at a timeline by which, or asset sales by which you can reduce your interest cost burden, even though it's not directly impacting your profitability as of now?
Yeah, let me clarify, Tanveer, that the interest cost that we've declared this quarter, the finance cost of 43 crores, also include a forex loss, which is 11.65 crores.
Okay.
So therefore, you will find that the finance cost has, is not comparable to the preceding quarter or the last quarter, and that is why you see a significant increase in that. So normally the finance cost would have been lower by 11.65 crores, excluding this forex loss.
Okay.
So what's your outlook on the margins, Mr. Lal? Good expansion seen over 1% this time round. Where do we see the margins sustain, going forward? Because your stock is doing very well. Shareholders would like to know, for an infrastructure company, what kind of targets are you, targeting as far as margins are concerned?
We are hopeful of maintaining EBITDA at around 13 to 14% levels. Of course, the business is, more truly reflected on an annual basis because the various projects are at various stages of execution. So EBITDA will fluctuate to some extent quarter on quarter. But on an average, on an annual average, I guess 13.5 to 14% EBITDA levels are sustainable over a period of time.
All right, Mr. Lal, thanks a lot for joining us. That was for the Pratibha Industries. The first quarter numbers were quite good. Margin expansion seen. Stock has also been doing good, just about 4 rupees away from a 52-week high. But let's go to Sajid Chennai, India economist at JP Morgan, who joins us on the show now. Thanks for joining us, Mr. Chennai. What's the headline number you're expecting on WPI, and how do you see food inflation and core inflation shaping up from here on?
So the issue with core inflation is that one of the reasons it hasn't come down even further, I think there are two reasons actually. One is that India's potential rate of growth has slowed much more than people think. So the negative output gap, so to speak, that we're currently running is not nearly as large as some others believe it is. If it was very large, we would not see core inflation at the 5% mark. It would have fallen much more by now, like it has in China, for example. I think the second issue is that producers have seen sustained increases in input prices, and the fact that margins have already seen some compression means that they've had no choice but to pass this on in the form of output prices. So I think both of those will sort of drive core inflation to be quite sticky. If input prices continue to rise, whether it's because of food prices going up or the exchange rate depreciating further, we actually think core inflation will go up and not down.
How do you see weak monsoons impacting food inflation, and do we in India have enough food stock to mitigate drought conditions?
We need to be careful about which food group we're referring to. Clearly, there's a very large buffer stock of grains, of rice and wheat, and I think if those are judiciously used, then the pressure on grain prices will come down. I think the concern really is more about pulses and oil seeds. Those parts of the country have been affected quite severely. So we expect that the inflation for those food groups will rise quite sharply, and food inflation as a result will move up, perhaps not by as much as in the 2009 drought, but it will move up quite meaningfully from current levels. Already it's running close to 12%.
Right. Sajid, the next important point that comes in is really what happens given that global food prices have risen. What do you expect from the RBI in terms of a repo decision or even a CRR cut over the rest of FY13?
So the RBI is faced with a difficult predicament. I mean, on the one hand, growth is certainly slower than India's potential, and that would argue for more monetary easing. But on the other hand, inflation continues to remain significantly above the comfort zone of policymakers. So I think their hands are severely constrained and tied because of the inflation dynamics, and if you have a bad monsoon, it becomes very hard for the central bank to cut interest rates at a time when food inflation and inflation expectations are rising so sharply. So I think the focus has to shift away from monetary policy given these constraints towards squarely the government and what the government can do, and I think that's where I think the potential lies, that if the policymakers in Delhi can improve investor sentiment, can consolidate the fiscal deficit, can ease some of these supply constraints in infrastructure and otherwise, I think that will have a far bigger impact on growth, on sentiment, on activity than any interest rate cuts by the RBI, given the inflation dynamics that we foresee.
Sajid, do you think that the drought has given less room to government to hike fuel prices? And by how much do you expect the government to hike fuel prices in any case?
Well, the drought does make it politically much harder to raise energy prices at a time when food prices are rising or expected to rise in the next few months. But I think you have to accept the fact that it's very important from the standpoint of bringing inflation down, of crowding in private investment, that we achieve some kind of fiscal consolidation this year. If we don't, if the fiscal deficit slips very sharply, we're in very real danger later this year that ratings agencies like S&P and Fitch may well downgrade India, which would be devastating for the corporate sector. So given all of that, I think some hard decisions will have to be taken. And with growth expected to be much below what was budgeted, and with NREGA payments possibly higher, there may be a demand for more packages for farmers in drought districts of the country. It's very important that two things be done, that the disinvestment program gets some momentum to shore up revenues, and that eventually we do bite the bullet on subsidies, because if subsidies continue to slip, then it becomes very hard to see how any meaningful fiscal consolidation can be achieved this year.
All right, Sajid Shenoy, thanks a lot for joining us for your views on inflation and other macros. Deepak, before you wind up the show, one call if somebody wants to take a position, overnight. What is a safe call which we can take? Something in the banking space? That's entire index has been doing pretty firm.
Well, today it's firm, but a lot of banks have been languishing quite a bit. I mean, many of them have gone to multi-week lows, multi-month lows also before recovering slightly. So at the moment, there are very few banks which are in a strong uptrend and not falling very much. And they're really the private bank category stocks, especially HDFC Bank. So I would go for an HDFC Bank. That's where safety would lie.
All right, Deepak, thanks very much for joining us and giving us your perspective on the market and also individual trading strategies. With that, we come to the end of this edition of Hot Stocks from Ajay and myself. Thanks very much for watching the show. Avan and Megha take up the action with Traders 20.